Financial markets were shaken last week as the conflict in the Middle East escalated, triggering a spike in oil prices as well as a broad sell-off in stocks and bonds.
Yes, Samer. Risk assets slumped, inflation fears and geopolitical risk dominated investors' sentiment. So investors took a flight to safe havens like gold and the dollar.
Well, the dollar isn't really a safe haven, but recently it is considered. Let's see how that's looking on charts. All right, everyone, welcome back. And here we are kicking it off with the technical outlook on the upcoming week. But before we go there, looking at gold, I had highlighted in the previous week that once market opens, because of the strong momentum on gold, it could open skyrocketing and basically filling this fair value gap exactly at this level. And this is exactly what had happened. That's why you guys should watch our videos more often with my commentary on it. All right, so let me go into the details of what happened and why gold fell this fall, even though we have a lot of fundamental reasons for it to go up, as in geopolitical tensions and risk and conflict and so on. Especially we are here in Dubai, we're living it life. Dubai is still a good place if you'd like to pay it a visit. Well, maybe you can't now, but actually some companies opened for flights. Etihad Airways are in Emirates, even though it's very limited, but still there's a possibility for you to go out and into the country. So aside from that, we can see that this candle here was completely reasonable. However, when it went up again, it should have broke up, but instead it causes this strong red Marubozu, and then market makes two candle patterns filling that gap on a smaller time frame, along us getting many positive reports for the United States dollar. And I have been telling you this, guys, for a very good amount of time. I've repeated this actually multiple times during the past 2 years of us making this weekly market update, telling you that almost every single time that tension globally goes to blow minds and gold skyrockets, they always, or for some reason, positive reports upon the dollar come to keep the market dynamic flowing in logical sequence. Well, in this scenario, sometimes gold doesn't really make sense when there is fear or in the market and they just keep buying gold and prices just go nonsense to the upside, right? And we have witnessed that, especially not a very long time ago. But dynamically, this is what usually happens. So we had multiple reasons why gold should liquidate this level, right? And anticipating to go below this level to grab liquidity. And that's exactly what happened, meeting demand at this support. All right, so this is what had happened to gold, and this gave us a clear indication why we should look to short gold in the previous week after this symmetrical pattern, and the reasons I had highlighted by reading market language, aka technical analysis. This is why you guys should learn technical analysis, because fundamentals or news reports, the ones that you could access easily or understand easily, rather say. Okay, to be honest, fundamentals are not always easy to understand, unless if it's just a clear news about the escalated situation. That's easy to understand that you should buy gold, but even though that would cause that was there, still gold fell down. So that's why you should learn a combination between technicals and fundamentals. That's why you come to us at Xylastar. All right, that's about what happened to gold. Now, from this strong demand and liquidity being swept, we can see that there is a strong candle, green candle here, and gold went to the upside. And this is forming somewhat of an ascending triangle pattern. And we all know what I think of ascending triangles on gold. So yeah, very, very, very bullish on gold, guys. Very, very bullish. If you want to go for a long position, not a financial recommendation, but you could keep your stop loss right below this, since already liquidity has been taken. So you could place it right below these two lows or wait for a trace. It may not retrace though, right? So you might as well want to go for a long position from now. All right, that's about that. About gold. Let's go into another asset. We are going into Bitcoin. Now, Bitcoin also, as I had highlighted, Bitcoin, guys, was very, very bullish from that level where it was. I think it was about 28. Yeah, it was about here. Yeah, grabbed that liquidity, which was, it was consolidating for a while in this range. Boom, boom, grabbed that liquidity. It fell down and found strong support. I had highlighted that it is very, very, or I'm very much on the bullish side because of the factors I've spoken about earlier. Go watch that video if you want to recall what it was. And boom, also the resistance. Guys, remember when I told you this is the support, that's the resistance, and we're very bullish on it? That's exactly what happened. Now, of course, because of geopolitical tensions, and we had Binance, from the courts in the United States, and the geopolitical tensions that, of course, cause pressure on Bitcoin, and we saw that happening, which made it to trace to also a solid support on a trend line. So what do you guys do when that happens? You tell me. All right, so we're anticipating that Bitcoin, from where it is now, it could make something like this, right? Retrace there, back a little bit, or maybe further a little bit down before a continuation to the upside. But either ways, I'm still bullish on Bitcoin regardless of the geopolitical tension. Geopolitics? Okay, whatever they call it, accents. All right, that's about Bitcoin. Let's go into Euro USD. So looking at Euro USD, yes, it fell, as in what we saw on the chart. It was a sideways expected movement, as in if you look at the previous week market recap. But I did highlight you guys that Euro USD should fall for the technical factors, and we had expected it to fall to exactly this support, if you guys remember, and this is exactly what happened. Market fell to this demand area, took liquidity, and went up, consolidated a little bit. So this is what's happening on Euro USD. We can see that there is strong indication from candles here, especially after that liquidation, and we have an unretested, basically broken support, and now is resistance, and we do have a bullish pattern at a strong demand. So from here we could see actually Euro USD going a little bit up, right to this range, before a continuation or an attempt to break below this support once again. That's about Euro USD. Now about Zylostar's Steam Vision, we can see that in the upcoming week we could see a possible consolidation where market moves to this resistance and possibly consolidate, but it is still on the bearish side. However, for this week, because what I had showed you in a few seconds earlier, this is on 4 hour time frame, so this could take a week of price movements where euro goes up, dollar goes down, etc., etc., or could take a week for it to go up and down. Who knows, right? Markets can be very volatile as a movement, but still predictable because we can anticipate people behavior when certain circumstances occur on the globe, around the globe. All right, that's about Euro USD. Going into Nasdaq. So Nasdaq consolidated, right? All right, regardless of the weekly market recap, what I had highlighted to you guys is, and what basically might happen next week, is a further consolidation here and there, but to Zylostar's opinion. But if we go into an upper time frame, I had highlighted to you guys that we have good indications that now might be the time for the bubble to pop up on Nasdaq and market to crash. And to what I tell you, for the past 2 weeks, we are seeing some actually attempt for the price to go above this broken support, but it is failing, and in both 2 weeks it had ended bearish, right? Even though this is still inside the range of this very volatile week. So unless we get basically a clear break below this level, it's not the optimal time for you to short, yeah? But if it was up to me, well, my trades are up to me, your trades are up to you, so you do what you think is best. But To what I estimate, it is always better to enter as early as possible, because when you have an early entry, you can have a better risk management. Your stop loss will be closer to your entry, and you could even take more lot size considering that range as in stop loss range. If you want to basically get a better risk reward ratio, you always want to enter early, and that's why we do analysis to anticipate, expect what might happen by a sooner movement. So all what I see here in these candles, all what I see here is basically telling is basically market telling me now is the time to short. Well, that's what I see. Yeah, as in team, we can expect it to, as in Xylostar team, we can expect it to basically consolidate more. As in, your decision is your decision, but you're getting intel from here, right? So you might as well utilize it as the best way possible. So that's about NASDAQ. Keep an eye on it. And I'm very keen about this because I like the way Michael Burry thinks. And you guys remember, like a month or 2 months ago, I'm not very good with timing, he was basically highlighting that it's a bubble. So who knows? We'll see what happens. That's about NASDAQ. If you guys want to know about certain information for the upcoming weeks, make sure to keep it down in the comment section and we shall look into it and update you in regards. That's about the technical part.
As the usual, great insights into technicals, and now let's go to fundamentals with Mr. Amidian from London.
Thank you, Samer, for sharing your insightful analysis on technical side. Here is Amir Amidian, Master of Finance and Investment student in UK, and also financial market analyst at Xylostar. I got a very, very big news. Iran super meal leader, the biggest dictator of the Middle East, got killed by Israel in Iran. And also we got some updates regarding the corporate earnings in the United States, such as Broadcom, AVGO. Greeting everyone, welcome back to another weekly market update hosted by Xylostar. And today I'm going to talk about geopolitical tensions at the beginning of this session because it's at the center of attention. So price of the oil skyrocketed as the tensions at the Middle East and the Persian Gulf has accelerated. So Donald Trump said the death of Iran super meal leader Ali Khamenei could bring big changes. While fighting in the region countries and the tension rise, officials also warned that Iran's next leader is threatened, making that promotion one of the riskiest jobs in the world. Let's get back to the US. US manufacturing activity expanded for the second straight month in February, with the ISM manufacturing PMI at 52.4, slightly down from 52.6 in January, but still signaling economic growth. New orders and production remain in expansion, while prices surged sharply to 70.5, the highest level since June 2022, indicating rising cost pressures in the sector. Employment stayed in contraction as companies remained cautious on hiring, although new orders increased. From the other side, US services activity expanded strongly in February, with the ISM services PMI rising to 56.1, which is the highest level since July of 2022, marking the 20th straight month of expansion. Last week, we got so many economic indicators from the employment sector in the US. Let's dive into it. I want to start first with the ADP. Private sector employment in the US rose by 63,000 in February, according to the ADP National Employment Report, while annual pay growth remained solid at 4.5% year over year. However, hiring was concentrated in a few sectors, suggesting limited broad-based wage momentum across the labor market. The next one is NFP. US non-farm payrolls increased by 130,000 in January, while the unemployment rate remained steady at 4.3%, which is pretty low. Job growth was led by healthcare, social assistance, and construction, while federal government and financial sectors lost jobs. Also worth to be mentioned, prior payroll figures for November and December were revised slightly lower. Let's go to Australia. Australia economy grew by 0.8% in the fourth quarter of 2025, bringing annual GDP growth to 2.6% year over year, supported by both private and public demand as well as a rebound in inventories. From the corporate earnings in the United States last week, Broadcom, one of the main firms in technology and chip making, reported a strong earnings with the EPS of $2.05 each share and the revenue of $19.3 billion, which increased 29% year over year. Let's have a look to the upcoming week. Next week, so many vital economic indicators will be released, such as CPI and GDP for the United States. Worth to be mentioned, Bank of England governor's speech will be released as well, and also GDP from the Great British Pound, and also JOLTS, job opening numbers, which is the last economic indicator for the employment sector, which left from the last week, is going to be released by the next week on Friday 13th of March. Stay tuned with Xylostar. See you next week.
Stay safe if you're watching from Dubai. Thank you for watching and stay tuned for the upcoming one.
Peace.